yeah, I came from London all the way to Singapore earlier this year, and wow, it's a massive difference. So London, constantly cold. Singapore, always warm.
That's true.
Everything's very predictable, and it's easy to sell. So far, so good, and yeah, looking forward to getting back to. So 2019 has been some year for me. I started the year off working for Money 2020, running their global content programs and driving their strategy, from the Vegas event all the way through to Amsterdam, Singapore, and China. And I finished the year off as a regulator, which is a strange move in some people's view, but the opportunity to work for one of the most progressive regulators in the world and drive fintech projects across different ecosystems across Southeast Asia and Africa was too good to turn down. So one of the things I've learned this year is about some of the trends that are going on in Asia, and in particular, Southeast Asia. So what I wanted to do for the next 5 to 7 minutes is share some of my insights, the growth opportunities, and where there are some challenges as well. So for those of you that are geographically impaired, these are the countries in Southeast Asia. It is a population of 650 million. Most are unbanked or underbanked, and so the opportunities in the region are absolutely immense. And just to give you a size of the prize, in 2019, digital financial services equated to round about 11 billion, whereas in 5 years' time, it's expected to reach 60 billion. And that is a massive increase. And what's driving this? It's going to be payments, clearly lending, and also the insurance sectors. And this was some research done by Temasek, the Sovereign Wealth Fund, Google, and Bain. But for this 60 billion to be realized, there are a number of critical enablers that are required. And we can kind of put those into 3 clear buckets. The first is financial infrastructure. And what I mean by financial infrastructure is a foundation for a digital economy. And you need a digitized identity system. And on top of that, a layer which is around payments. It has to be real-time, account-to-account solutions, so the velocity of money can flow around the economy seamlessly and efficiently. And then the last piece is around a data exchange, so you can have effective credit bureaus to be able to score people in the countries. The next area, which a number of countries are suffering with, is funding. To be able to have enough funding for some of these projects, whether that's innovation labs, so you can truly experiment, or for startups, for seed capital, all the way through to growth capital. And then the last piece in the funding element is around adoption and incentivized structures, so then people start to use these services. The third leg is around supportive regulations, and I suppose this is the policy wrap around the financial structures and the investment structures. And so they need to be incentivized. You need to have the right level of support to drive through financial inclusion initiatives. The next area is around electronic KYC. And there's a stat somewhere that I read recently around 40% of a bank's cost base is down to onboarding. So how can you make that more efficient and effective so then it isn't 40% of a bank's cost base, it's much cheaper and you can seamlessly onboard your customers. And the last aspect is quite an important phenomenon that's occurring in Asia at the moment, and I mentioned it yesterday on this stage around virtual banking licenses. And so there are a number of governments across Asia that are granting these new virtual banking licenses to new entities. And we're starting to see tech players, so the likes of Ant Financial and Tencent, looking to acquire these licenses. They've done so in Hong Kong, and it's spreading out slowly to Singapore, Malaysia, Taiwan as well. And so we'll start to see a new breed of players. We're also seeing some consortiums come together where traditional banks and tech players and fintechs are coming together to form a brand new bank, which in this part of the world is kind of unheard of. So, with these critical enablers and the growth prospects of 60 billion, it's attracting many, many players to the marketplace. And so across Southeast Asia, we're seeing 4 types of players. Clearly, you have your established FIs who have a captive audience, potentially legacy technology. You have your fintechs that are looking at specific verticals, extremely agile, very nimble, and are able to serve customers well, but may not have the customer base. And then you have two new segments, and that is the consumer tech platforms, so the likes of the e-commerce players, so the Alibabas of this world, as well as the ride-hailing companies, so the Grabs and the Gojeks, and they're all looking to make a play in financial services. And then the last play is all about established consumer players. So these are the airline companies, retailers that have been around for some time and have a captive audience and are looking to make plays in this space. So, in our opinion, FIs and fintechs face a massive challenge in Southeast Asia. To try and compete with these large organizations that have captive consumers and a large war chest, it means that the importance for FIs to go down the digital journey and innovate with new technologies is becoming extremely crucial. And so what we're seeing at the moment is a blurring of lines. So clearly, you won't see banks and fintechs become airline companies, but you will see airline companies become banks. And I think that is quite a different phenomenon that we're seeing in Southeast Asia compared to the rest of the world. So one of the things, when we conducted some research across Southeast Asia, we found that 80% of banks don't have innovation arms. So they're not able to experiment with new technologies or with new partners because the funding simply isn't there. And that is a big challenge because some of the proof of concept work takes at least 6 to 14 months. And on the fintech side, in particular the business-to-business sector, to actually get a proof of concept with a bank through the layers of procurement, legal, risk management is so time-consuming with the chances of success at around 30%. So there are two main issues with collaboration to really experiment with new technologies. So that's why the MAS, the IFC, so the International Finance Corporation, and the ASEAN Bankers Association came together to form AFIN. And essentially, AFIN is looking to accelerate the collaboration process and enable banks and fintechs to connect in a seamless way without having to spend a great deal of money. It's a non-profit making organization, and it's there to serve the whole of the Asian region. So this is what it is. Essentially, FIs can release or provide problem statements in the platform, and fintechs can respond to these. And so banks can test a variety of fintechs APIs in a seamless and efficient way without creating any risks within its four walls. And so it's about discovering, designing, and deploying. And it's essentially an innovation lab in the cloud. It's also one of the first, and let me get this right, cross-border, open architecture API marketplaces, which enables both sets of organizations to collaborate seamlessly. And this is how it works. So, for example, if a bank had a problem with or had a problem statement around risk management, they could post that problem within the platform. They can then select a number of fintechs that they would like to experiment with. They would then test those APIs and deliver the early phases of a prototype, and then they can shortlist the fintechs that they actually want to work with, and then take this off the platform for the commercial negotiations to begin. And it can reduce the whole proof of concept phase drastically. So at the moment, on average, it's about 6 to 14 months. It can reduce it to within 1 month. So, final thoughts. The reason why I was sharing the Apex platform isn't just a plug for MAS. It's more around the importance of public and private sector partnerships and how both have to come together. And so I'm showing this last slide as my final thoughts because while this was a slide I showed as critical enablers for Southeast Asia, it's pretty relevant for most of the world, really, if you want to develop a digital economy. So you need to look at your financial structures, you need to look at scaled funding, and then the policy wrap around that. So then you're creating those public and private sector partnerships.